Today, let's talk about gold and the price outlook ahead. If we examine gold's historical performance, its bullish cycle typically between 3500 to 3700 days. On the monthly time frame, the RSI is currently at one of the most overbought levels. The last time we reached this RSI level was back in 1980. If we look closely at the price fractal before entering the final impulsive leg, gold experienced a correction from 1974 to 1976. After that, it entered the last major bullish leg until 1980. Currently, from 2020 to 2022, we also saw a period of correction and consolidation, followed by the beginning of what appears to be the final bullish leg. If gold follows its historical pattern and completes another 3700 days uptrend, we should expect to see the cycle top something between June or July of 2026. If gold behaved like a previous cycle, we had roughly a 150-day bear market with about 44 to 50% price correction. Based on that, we should expect gold to drop to around like 2300 to 2000. Whenever the public structure breaks both on the price and the RSI, you see, like every time, and we form a bearish divergence at our RSI, the price tends to drop repeatedly and we enter a bear market. This has also happened in previous cycles. Once the parabolic curve broke on both price and RSI, a sharp correction followed almost immediately. You see here, when we got the bearish divergence and our parabolic broke, and we goes to bear market. Right now, we are at the highest monthly RSI level. You see here, 92. If you look at the 1980 cycle, after consolidation phase, it took about 1300 days for the next bullish wave. 1300 days. From 2022, if we count approximately 130 from 2022, if we count approximately 1300 days forward, we likely reach our cycle top something between June and July. Before gold moves toward a new higher high, we may see a small correction that creates a bearish divergence on the monthly RSI, like this time and this time. We need a correction, a small ones, create a bearish divergence on the monthly chart. After that, the final bullish wave could push prices slightly higher, possible to 4800, possibly maybe to 5200. If you look at the daily chart, the bullish wedge pattern that typically tend to fall and go down is very clearly visible. On the chart, the uptrend has weakened and the bullish candles on the daily time frame are getting smaller, which reinforces the probability that the pattern will play out. The RSI is also showing a negative the bearish divergence, which could pull the price down to 3700 area. As the price slowly moves down and moves down to the bull market support band, it could continue drifting lower in the controlled manner. In my view, we are unlikely to drop below 3600 before heading to the final upward wave. However, this 3450 level remains is very strong and important support area to keep in mind. My expectation is correction somewhere between 3800 to 3650, followed by a move toward new highs in the 4800 range, and in the most optimistic scenario, possibly 5200. Of course, the 5000 level is a major psychological barrier for gold, and breaking above it will not be easy, as many traders are likely to take a profit around that prices. And the next scenario that would be happen is that the gold previous bullish cycle, which ended in 2011, the price first made a very strong upward move. Then on the daily time frame, it experienced a sharp drop in Q4 of 2011. Gold attempt to reclaim to previous high, but the trend lacked the necessary strength. A bearish flag or a bullish wedge pattern formed, and the daily RSI showed a clearly bearish divergence at the Q4 of the 2011. After that, gold began a deeper correction and eventually with a pullback to that level which the initial drop began. It entered its bear market in early 2012. However, in that cycle, we were at the end of the 3700 days upward cycles, while in the current cycle we are around 3500 days. Even so, the similarity on the chart right now is significant, and a strong peak. We see the strong peak followed by a heavy correction. We see the strong peak However, in that cycle, we were at the end of the 3700 days upward cycle. I mean, in 2011. While the current cycle we are around 3500 days. The similarity on the chart right now is significant. a strong peak followed by a heavy correction, and then an attempt to reclaim the high, but the trend has weakened noticeably. We have formed a bullish wedge pattern again, along with the bearish divergence RSI. It is possible that is already the end of the current gold cycle. Based on the fractal and the historical pattern, we have two potential scenarios ahead of us. The first one, gold corrects down to its bull market support band, then within the next 200 days makes a final push toward a slightly higher high than before, like 4800. In the second one, we may have reached the end of the cycle earlier than the previous one. In this case, late 2025 could be the end of the gold bull market, similar to the end of the 2011, where a flag or a bullish wedge forms before the market reversal into the bearish trend. If you like this video, give the video a thumbs up and subscribe to the channel. Peace out.